Good morning, everyone. This is Blackforex coming in with another pre-market analysis video. This morning, we're going to be looking at the USDJPY. Before we get started to break down this Forex pair, we have to state that this video is for educational purposes only. This is not financial advice, but we all know why you guys are here to find good, credible Forex content that can help improve one's ability as a trader and help put a little bit extra money in your pocket, especially in these troubling times. So, with that being said, let's go ahead and get started breaking down this currency pair, okay? Now, you know what we do like to do at Black Forex, especially if you've been watching our videos for some time. One thing that we like to do is before we get to talking about the technical analysis, what's physically going on the chart, we like to discuss the fundamentals, what's actually going on with the economics of the USD and what's going on with the economics of the JPY. Okay. Now, the JPY still remains one of our weaker currencies heading into this trading week. This is due to some very poor economic news came out about the JPY at the latter part of last trading week, and also it did not raise its interest rate to combat its inflation, because the Japanese economy is also suffering from inflation just like the American economy. But our Federal Reserve and the Fed chair did raise the interest rate from 25% to 50%, and Japanese actually kept their interest rate the same at 10%, which basically means nothing has changed. And then with the also coupling of the poor economic news that just came out, it still remains one of our weaker currencies heading into this trading week. Okay. Now the USD, it's still in a process of deciding how the federal interest rate increase is actually going to affect its strength. It may show some initial strength at the beginning of the part of this trading week, and then we'll probably be able to see the true story of whether the USD is going to be able to maintain and sustain this strength from the increase of the interest rate going towards the latter part of this trading week into the next trading weeks yet to come up. Okay. So fundamentally, USD is somewhat strong. So, like I said, we just have to see how the interest rate is going to play out. But on top of that, we are still suffering from inflation as well. We just need to see how the increase in the interest rate is going to affect its long-term strength overall. Okay. Then also on the other side of that, the USD has acted as a non-traditional safe haven currency throughout this Russian-Ukrainian war. I think we're going into our fourth or fifth week of this war still being active. So now it's almost like a new trading norm. So we're in between an unstable market and a panic market where any type of news that come out can sway the market one way or another. Now, JPY is a traditional safe haven currency. So, it's almost like you got to battle of a non-traditional safe haven currency and a traditional safe haven currency if the market starts to panic. So I'll be very interested to see if we start to go into panic market how this would behave. Okay. So with that being said, let's go ahead and break down this forex pair. Okay. So as you can see, go back a little bit. All right, we've kind of been consolidating with these two price points with breaks of the price points since January all the way up until, let's see, around March. So almost roughly for about 40 to 45 days we were in consolidation. Then going into last trading week, we did have a breakout from that consolidation from the long side and continue to go up. But as we can see, we started to go up and we started to lose momentum. We came out very strong, had a push up, a weak push up, and another weak push up. Now it looks like we're consolidating. Remember, as I said in previous videos, that charts are not unilateral. They just don't go up. They just don't go down. It has to go down before it goes up. So it goes up, goes down, go up, and goes down. You look for high highs and high lows. Okay. If you need an example of that, this would be considered a high high. This would be considered a high low. This would be considered a high high. This would be considered a high low. Okay. So with that being said, now we're gonna have to try to see what's going to be happening with this. So even though JPY is one of our fundamental weaker currencies heading into this trading week, we are going to have some type of retracement at some point. Okay, so it looks like we made retrace as far as here, this area, or this area here, or possibly as far as this area here before we decide to go up. Okay, so we may retrace to this area here, to this area here, or retrace as far as this area here before we continue to go up. Now, just because we're retracing does not mean all of a sudden that the JPY is a strong currency and USD is a weaker currency. That does not change the fundamentals of exactly what's going on. It's just that in order for charts to continue moving forward, you need retracement. Okay, you got to think about this from just an economic one-on-one standpoint. Okay, these are all buyers, and in order to keep buying, you need sellers. Okay, so if you want people to buy out your, if you want to be able to buy things, you have to have people selling it to you. Okay. So you don't want to buy things at higher prices. You want the prices to drop back low again before you go ahead and continue to buy. So you got to think about it from that standpoint. So once again, the chart can retrace as far as here, as far as here, or as far as here before deciding to go up again. Now, the thing and tricky about this is the timing. Sometimes these retracements can actually take a whole trading week, or they can take the first big latter, the first beginning part of the trading week before the latter half of the trading week going back into its fundamental trend. So just because you know that this is going to be for a long position for the long term, you just don't want to press buy, because you can be in a position where you're in a heavy retracement, hitting your stop loss all crazy. Okay. So just wait for the chart to finish doing what it's doing before you go ahead and place your trade and go into the fundamental position. Now, if you're one of those people who can't wait for that, then you can basically short this to an area here, here, and here. Each time we get into these areas here, what you're shorting, you need to pay attention to see is there going to be a reversal coming. Me personally, I like to trade momentum. I don't like to trade shorts. So I would wait before this finishes out and just find another currency pair to trade before this one activates and start going back in this fundamental direction. Okay. Hope that information was helpful for you guys. Happy trading.